One company that I've been watching for the last roughly 3 years has been the OMFIF. They have been one of the biggest players in advancing public blockchain integration into the banking system. And the best part about this is that this document alone, titled Driving Public Blockchain Integration in Banking, was written by Hedera, Aptos, Minsait, Stellar, and Ripple. 3 of these names, Hedera, Stellar, and Ripple, are 3 names that I've talked about for years on this channel. When we think about what's really going on, we know that public blockchain integration in the banking system is happening through tokenization. Tokenization is such a crucial piece of the puzzle because it enables everything on chain. When we start to hear the talks about every US market is moving on chain or every single asset is moving on chain, what that really is telling you is that this is the new system. We have here, while the financial world is eager to embrace the promise of public blockchain technology, some in the regulatory community believe that it represents a unique risk. And although, yes, there is definitely risk to it, the main thing that we are looking at here is that clarity is becoming a reality. So that is, completely removing all of the risk tied to this. So then we look at the adoption phase. So we have here that the stance is far from universal. US regulators are keen to see public blockchain adopted and are rapidly dismantling regulatory obstacles, leaving the world's banks on an uneven playing field. The OMFIF has created the Public Blockchain Working Group with the support of Aptos, Hedera, Minsait, which is Indra Group, Ripple, and Stellar Development Foundation. The group met with 6 financial and bank regulators to examine the challenges involved in regulating the use of public blockchain at commercial banks. This is why I keep saying that Hedera, Ripple, and even Stellar are 3 names you need to focus on in this space because they are, 3 of the chosen ones in my opinion. They will be, sitting at the table when all of the dust settles. So when we think about what's happening here, right, we look at the key recommendations: accountability, governance, operational resilience, asset control, settlement finality, confidentiality, interoperability, throughput and fee stability, and validator considerations. All of these things are crucial to get right and make sure that, are fully embraced to ensure that this new system becomes a reality. Now, one name that we have been talking about for years has been Ripple. And in this video, I really want to put a spotlight on Ripple with the OMFIF. We go all the way back to April of last year. So almost a whole year ago, there was a document from the OMFIF which was titled Architecting the Future, Building a Visionary Tokenized Financial System. This is that new system. It is a digital tokenized system. Within this, we have central banks are at a crossroads in shaping the future of digital finance. The emergence of tokenized financial infrastructures raises key questions about the role of central banks and commercial bank money tokens, particularly tokenized deposits, stablecoins, instant payments, and the channels of interlinkages across such systems. Central banks recognize the need to actively engage to fulfill their mandates within a changing financial landscape, yet they also face the complexities of defining their evolving roles. Yes, this is why when we look at what central bankers are doing and commercial banks, they are all moving on chain, but they're doing so in unique ways to ensure that they are still alive. This is why I've always said that this new system, if these banks don't start to adapt, they will die, which is exactly why they are all trying to move on chain at this moment. Now, the OMFIF is not a new group. Like I said, I've been focused on them for well over almost 3 years now. Back in May of 2023, I put a spotlight on the OMFIF because we did see Ripple with the OMFIF back in 2023 discussing the approaches to the crypto market that regulators are taking, where consensus is emerging and the gaps that remain to be filled are starting to be worked on. I said here that the OMFIF has been a think tank organization I've been keeping a close eye out on. $43 trillion worth of investment assets is absolutely massive. We know Ripple just expanded big into crypto custody and have been focused on tokenization with the XRP ledger. I expect this amount of money to trickle into this space over time, probably nothing. Now, if we think about the names behind the OMFIF, like I said, they're not a small time name. Yes, they do have $43 trillion in assets at the heart of the network. They are a global public investors with investable assets worth $43 trillion. Most of this is coming from the central bankers, the sovereign funds, pension funds, regulators, and treasuries that are all tied back to the OMFIF. The advisory network itself is absolutely stacked. We have here the Advisory Council. These are some pretty big names, obviously. But the main thing that I'm looking at, and the names that I'm really focused on, is beyond the Advisory Council. In fact, if we scroll all the way down, we have capital markets, where you have every single major bank. Essentially, you have commercial banks. You have DZ Bank on here. There's a ton of names like Standard Chartered Bank, DBS Bank, DZ Bank. We also have, if we scroll down a little bit more, there's a ton of universities as well, more banks, BBVA. We also have central banks. On top of that, we also have other larger banks as well. I know that before JP Morgan was on here, I'm pretty sure that they still are, but the list is absolutely stacked. We have been fully focused on the OMFIF for years because of how big of a group they are. They even have the World Bank on here. Like I said, just a full-on stacked organization. And also, by the way, looking at the chair or the individuals on the chair themselves, we have players from like the BIS, also the Bank of Canada, the Bank of England. We also have Franklin Templeton on here. I mean, the list is so massive, which is why when we think about this organization and we think about some of the documents that they've been putting out, like for an example, public blockchain integration in banking, it goes to show you where we're headed. Now, I bring up the OMFIF because just recently on January 20th, they put out another document, which is stablecoins, why central banks should embrace stablecoins. Stablecoins are no longer a niche experiment. They now have a market value in excess of $300 billion. Regulated stablecoins could play a key role in financial markets alongside other forms of money. Now over here, like I said, why central banks should embrace stablecoins. We have here that stablecoins are no longer a niche experiment. They are growing. That moment is likely to accelerate following the Genius Act in the US, which introduces federal regulation and allows banks to issue stablecoins. While central banks have been skeptical about stablecoins, they are now recognizing the role stablecoins could play. The European Central Bank recently noted the benefits of stablecoins for cross-border payments and said that the financial ecosystem of tomorrow will host multiple forms of money. The Bank of England said stablecoins could lead to faster, cheaper retail and wholesale payments as part of a multi-money system underpinned by central bank money. Regulated stablecoins could play a key role in financial markets alongside other forms of money. First, stablecoins are more likely to complement the existing financial system than replace it. This is evolution, not revolution. Second, these risks could be substantially reduced by regulating stablecoins and bringing them inside the central bank safety net that underpins confidence in commercial banks. The solution lies in central banks channeling stablecoin momentum, not fighting it. Central bank money will still be needed and stablecoins can complement it. And yes, when we think about what's happening here, like stablecoins are not going to replace central bank money. We're still going to have CBDCs. We're still going to have stablecoins. There's going to be so many different assets. So when we think about that, we also look at atomic settlement of all of this, an alternative way to mitigate settlement risk. I think instantly of Ripple with XRP, because if you guys do remember the European, or not the European Central Bank, the Bank of England actually hosted a POC back in 2017 solving atomic settlement in an RTGS system of central bank money with XRP as the bridge. Yes, that's still a very big thing to focus on today, nearly 10 years later, because we are now starting to see that use case become a vital piece of this system. That way we could see cross-border payments become a reality because of stablecoins and CBDCs and things like that, but you still need that bridge currency. So when we think about what's happening here, yeah, we are starting to see a completely new world rising around finance. And we look at integrating stablecoins into the financial system safely is the key. Stablecoins are entering the scope of regulation across the world. The European Union's marketing crypto asset regime is enforced in the UK and the US, and other jurisdictions like Singapore, the UAE, Hong Kong are all advancing their own frameworks. These rules restrict risk-taking, strengthen governance, and apply anti-money laundering measures, making runs and misuse less likely. Stablecoins are becoming a crucial piece of the financial system. The thing about stablecoins that's so important to look at is the fact that stablecoins are enabling the mass adoption of the underlying rails. This is where you see technology like the XRP Ledger or even Stellar or even Hedera. you no longer see that being utilized because nobody will realize that they're using it because of how efficient stablecoins work. This is the key to mass adoption, where you don't even see the actual blockchain in the background. You just see stablecoins moving and settling. It's just like swiping your debit card or, paying with a credit card. You don't really see the tech. You just see that the transaction goes through. The same can be said about these new rails. But this was all written by Matthew Osborne, which is the policy director of UK and Europe at Ripple, telling you exactly what's happening here with stablecoins. That's why when we go back to that video, and I'm going to play this video, this is from Reese Merrick, big shout out to Subjective Views. This is why RLUSD is a compliance first settlement asset in institutional trading environments, because RLUSD has to be compliant, it has to be transparent, and it has to be fully regulated in order for central banks to embrace RLUSD and other stablecoins. This is the big, plus one that RLUSD has over assets like USDC or even USDT. But check this out.
And Ripple RLUSD is now, I think, one of the main contenders. We're talking about the heavyweights, USDC, Tether, far ahead of everyone else for now. But so RLUSD over $1 billion right now. The majority of that on Ethereum, right? But there's also, you're building up the XRPL, the XRP ledger contingent. How much of it's on XRPL then?
I think it sits around 30% on XRPL now. I think if you look at the overall stablecoin volume, 70% of the total stablecoin volume sits on Ethereum. So it certainly made sense for Ripple to launch RLUSD both on Ethereum and XRPL, and certainly we will believe that people will see the benefits of XRPL in terms of the speed, in terms of the transaction cost being a fraction of a cent, and ultimately in time we'll see a lot of that volume move over and eclipse kind of what we have on Ethereum there. We're already kind of seeing that on the institutional side in terms of that real need to implement solutions which are going to serve businesses. So we recently, you may have seen, acquired a company called G Treasury. They have a treasury management solution. They have visibility of over $12 trillion of global businesses that are moving funds just between entities globally. And I can tell you the amount of interest we have had off the back of that announcement from these large enterprise customers to be able to utilize RLUSD as a method of moving and funding their businesses globally is astonishing. If you think at the moment, if you're a global business and you need to fund your company's operations for the weekend, you have to send a payment on a Wednesday, Tuesday, to ensure it's there on a Thursday or Friday to have that operational efficiency. With RLUSD, you can send it on a Friday afternoon, you can send it on a Saturday. It's 24/7, 365 days a year, and I think that's where really we're going to unlock a lot of growth across the whole industry, because like you mentioned, it's going to be the standard. The demands to people today are very different in terms of having those bound by local rails, by the 9-to-5 kind of banking world, and moving on to crypto and digital assets is going to solve a huge amount of those pain points. So yeah, we see a lot of, we're very optimistic on the growth there.
Yeah.
So yes, this is exactly why they are taking the compliance first step, right? They want to make sure that everything that they are doing is fully compliant, because at the end of the day, number one, we know that Ripple just got approved in the UK and the EU with their digital asset payments license. On top of that, they can now provide services in those areas. They could also introduce RLUSD in those key areas, which is, one of the first major compliant, transparent, and regulated stablecoins that this space really is, first seen. I mean, again, we go back to Circle's USDC, we go back to Tether. Although, yes, they are regulated, they're not even close to RLUSD's level. But at the end of the day, we know that central banks are going to enable, wholesale cash too. But stablecoins are going to be a core piece of the system. We know that stablecoins are going to be integrated into the financial system in a big way. Right now, stablecoins are still very early in, the adoption phase. But when we think about what's really going on here, I would argue that RLUSD is probably one of the few stablecoins that will be able to be fully integrated into the system safely and confidently, because again, we even go back to Tether. Tether's lack of transparency is a very big negative aspect around Tether. On top of that, we know that they had to launch a new stablecoin to just adhere to US regulations. Then we go back to USDC, and if we look here, again, this is written by a Ripple employee. You know, stablecoins are more vulnerable to shocks, as seen when USDC temporarily lost its peg during, the Silicon Valley Bank collapse in 2023. USDC is not even close to ROUSD's level. This is why what Ripple is creating here is something extremely special. This is where we look at mass adoption of ROUSD, which technically will also be mass adoption of the XRP ledger, because at the end of the day, all of this is where we start to see public blockchain integration into the banking system. But we also won't be able to see the underlying tech. Everything will just move and work a lot more efficient without people realizing what they're even using. It's just like the internet, right? Nobody really cares about, TCP over IP or HTTPS. They don't really look at the tech around it. They just know that if they go onto Google, they can look up a web page and it will load. They don't really know why or how it works. They just know that it does. And the same goes with even crypto and blockchain-based payments. They're not going to realize what's happening. They just know that it works perfectly, and it works a lot more efficient than what, the traditional system was doing. So this is how we get to mass adoption. And I do believe that Ripple is one of the core players here. I also think that Stellar and even Hedera are as well. So with that being said, I hope that you guys enjoyed this video.